Welcome to a speculative journey into a future that, while fictional, asks us to confront uncomfortable truths about economic fragility. We've all heard whispers of economic shifts, of the changing tide of wealth. But what if a single event, a seemingly isolated crisis, accelerated those changes beyond recognition? Imagine a year, 2025, not a global war, not a natural disaster of unprecedented scale, but something far more insidious, the Great American Shutdown of 2025. It was an explosion, but an implosion, a slow-motion collapse that didn't just rattle the foundations of the American middle class. It silently, systematically erased it. This wasn't a sudden cataclysm. It was a creeping economic frost, a consequence of systemic vulnerabilities laid bare by an event few saw coming, and fewer still understood its true depth until it was too late. This video will explore how this fictional yet plausible scenario unfolded, dissecting the mechanisms that led to such a profound societal restructuring, and asking what lessons we can glean from such a sobering hypothetical. The genesis of the shutdown, a perfect storm. The seeds of the 2025 shutdown were sown in a complex interplay of pre-existing conditions and a critical trigger event. Decades of declining real wages, soaring healthcare costs, stagnating savings, and ever-widening wealth gap had already left the American middle class vulnerable. Many households were living paycheck to paycheck, burdened by student loan debt, mortgage payments, and credit card balances. The traditional safety nets had frayed, and the collective financial resilience was an all-time low. The trigger itself was a novel, highly transmissible cyber attack, dubbed net rot, that didn't just target government infrastructure, but systematically cripple the nation's digital financial transaction systems. It wasn't designed to steal money directly, but to halt its movement, creating a nationwide choke point. Banks couldn't process transactions, ATMs went dark, credit card networks failed, and direct deposits became impossible. The economy, so utterly reliant on digital flow, seized up. The initial response was confusion, then inconvenience, then a chilling realization. The digital age had brought unprecedented efficiency, but also unprecedented vulnerability. The economic freeze, when cash was king and vanished. As net rot spread and persisted, the digital economy ground to a halt. Small businesses, unable to process payments or receive supplies, were the first to buckle. Their thin margins offered no buffer against even a week of interrupted commerce. Larger corporations, while possessing greater reserves, faced supply chain paralysis and a complete halt in consumer spending. The federal government, itself reeling from the cyber attack's impact on its own systems, struggled to deploy an effective response. Emergency measures were slow, fragmented, and often insufficient. Panic buying of essentials emptied shelves, but without functional transaction systems, even those goods became inaccessible to many. The rare pockets of physical cash quickly became the only medium of exchange, and scarcity fueled a black market, further exacerbating the crisis for honest citizens. The informal economy, while resilient in some ways, couldn't absorb the shock of a nationwide, sustained digital blackout. This wasn't just a recession, it was a systemic financial freeze, where the very mechanisms of commerce ceased to function. The digital umbilical cord of the economy had been severed, and the offline world wasn't ready to cope. The Great Divide, the two Americas, emerged. As weeks turned into months, the shutdown exposed and amplified existing inequalities, creating a stark societal chasm. Those with significant tangible assets, land, gold, pre-stock supplies, or even just physical cash reserves, found themselves in a relatively stronger, albeit still challenging, position. They could weather the storm, trade for necessities, or even acquire distressed assets at rock-bottom prices. This group, often the upper echelon of the pre-shutdown middle class and the already wealthy, saw their relative position solidify and even improve. But for the vast majority of the middle class, those whose wealth was tied to digital assets, regular paychecks, and access to credit, the situation became dire. Savings account became inaccessible numbers on a non-functional screen. Retirement funds, while technically existing, couldn't be drawn upon. Mortgages, car payments, and utility bills piled up even as income disappeared. Foreclosures and repossessions skyrocketed, not because people couldn't pay, but because they couldn't access their money to pay. The digital world had been their lifeline, and its sudden disappearance left them adrift. The silent eradication, from middle class to new lower class. The erasure of the middle class wasn't a violent overthrow. It was a gradual, agonizing descent. With no income, no access to credit, and dwindling physical resources, many were forced to sell their homes, often at fire sale prices, to those with accessible capital. Small businesses, the bedrock of many communities, went bankrupt en masse, unleashing a wave of unemployment. The concept of job security became a cruel joke. Healthcare, always a burden, became an impossible luxury without functioning insurance or payment systems. Families moved in with relatives, abandoned cities for rural areas, or found themselves in makeshift communities. The psychological toll was immense, a sense of betrayal, of having played by the rules only to have the game fundamentally changed. The social contract, based on hard work leading to upward mobility, seemed utterly broken. What emerged was a society increasingly polarized, a smaller, more concentrated upper class that had managed to navigate or even profit from the crisis, and a vastly expanded, struggling lower class comprising most of what was once the vibrant American middle. Rebuilding in the aftermath, a changed landscape. Eventually, with immense effort and international assistance, the digital infrastructure was painstakingly rebuilt, fortified with new, more resilient protocols. But the world that emerged was fundamentally altered. The financial system was re-engineered, with a greater emphasis on decentralized technologies and a grudging acceptance of physical assets as a hedge against future digital fragility. However, the economic landscape was irrevocably scarred. The opportunity for generational wealth building for many had been obliterated. The social fabric had stretched to its breaking point. While new industries emerged around cybersecurity, resilience, and localized economies, the wealth generated from these new ventures often flowed to the already established, or to those who had successfully weathered the initial storm. The memory of the 2025 shutdown served as a harsh lesson. Prosperity, when built on invisible and vulnerable digital foundations, can vanish as silently as appeared, leaving behind a starkly reconfigured society where the once proud middle class had become a ghost of its former self. Conclusion: lessons from the shadow of 2025. The fictional 2025 shutdown offers a chilling thought experiment, a stark warning about the potential fragility of our interconnected world and precarious position of an economically vulnerable middle class. It highlights the dangers of over-reliance on single systems, the critical importance of financial literacy and personal resilience, and the societal cost of unchecked economic inequality.